A wild day today for gold prices as the yellow metals saw a surge above $1,200 and then retrace back below it. We have Frank Holmes on this edition of Gold Game Film joining us from Vancouver. Frank, how are you?
Well, it's good to be out here. It's perfect weather, and but it's still pretty sad regarding the junior mining sector.
Yeah, it's certainly tough out there for the junior mining sector. We'll get your 2 cents on that in a bit. But first, let's talk about seasonality and gold prices. Now, we're moving into the summer months, and we know that you look at seasonality for price strength and weaknesses. So what are you making of the yellow metal right now?
Well, there's two parts I've always liked to talk about is the love trade and the fear trade. And the fear trade is still there, that is, in respect to gold being difficult because the US dollar has the highest real interest rates when you compare it to other big currencies in the world. Maybe this will all change or renminbi becomes, what they're pushing for is become a major global currency. But until that happens, right now the dollar is king without raising interest rates. So that does create a dampening, and ISM numbers came out today in the US, and that creates some volatility with regard to the dollar. But I think the bigger part is the seasonality that's going to come in that's driven with the love trade, and that usually gets a gold bottoming in June, May-June sector, and we'll see how if we get the real trough here going into the second half of the year.
Now, before we get to our OT segment, we are going to touch a bit on the Cambridge mining show that you're at right now in Vancouver. Like you said, junior mining sector is not looking very good right now. How is the conference?
It's quite bearish. It's really lots of apathy and trying to find a bottom. I was speaking, and I believe that you're going to see the big major mining companies. This will be the trough year for all these cuts that are making. The tech corporation's gone through big layoffs. So this will be, I think, that trough year, which will be constructive looking 12 months out for many of the mining companies.
All right, Frank, let's get to our opportunities and threat segment. Starting with opportunities, a bit of a change up here. You have USD could be bullish for gold prices according to Cornerstone Macro Research. What do you make of that?
Yes, they believe that the dollar's probably had its run because I think the factors we look at is that industrial production from last year's strong dollar, exports of high-end manufactured products to the U.S. are slowing down. So not only are buyers having more difficult, slower economy in Europe, etc., but the dollar's making it just non-competitive. So you're seeing a slowdown in industrial production for 5 months in a row. And this, the only way to solve that is for the dollar to become more price competitive.
More opportunities looking at China establishing a new gold fund. What could that mean for investors, Frank?
I think it's bigger than that. You know, they announced there's the Silk Road, and it's very important to follow. There's many collateral factors that go with that. One is setting up their own World Bank, and there was some friction pushed back against it, but it's moving forward. In addition to that, they're now launching a $16 billion gold fund to expand the gold production for central banks in this whole area. And that's to reinforce the value of a country's currency. Central banks buying gold is basically saying that governments are destroying the values of their currency with this continuous printing of money.
All right, Frank, looking at threats now, aside from the obvious with the US dollar, there's also ETF outflows that are showing disinterest from investors. What are you making of it?
Well, they're very mercurial, and it's just really a collateral factor from the dollar. So the dollar is strong, then gold redemptions take place. If all of a sudden the dollar starts getting weak, we'll see money flowing back into the GLD. It happens very fluidly. There's quant models. But I think more important is that we talked about a couple of weeks ago is D.E. Shaw. They're one of, I think they represent 3 or 4% of all the daily trading volume in the New York Stock Exchange. So when people like that with their quant models all of a sudden start buying gold as an exposure, that's a very quant-driven shop, and I think that that's important to recognize how they position and think.
And Frank, that brings us to our touchdown pass of the week. Where is it going?
Well, everyone's going to be focused on Friday for the employment numbers, the unemployment numbers, and what does that mean to interest rates? There's a whole thought process now. It's not just looking at GDP, which was, as you recall, I talked about industrial production declining for the past quarter. They reset lower the GDP numbers last week. So I think that that's had a bit of a negative sentiment. But this income and rising income will be important, that if we do get a slowdown in this job creation, you'll probably see rates fall in the U.S. and then therefore the dollar will get weaker, and the weaker dollar, you'll see gold respond on an uptick.
Thanks, Frank. And thanks for watching this edition of Gold Game Film. As always, comments and questions are welcome at newsfeedback@kitco.com. Have a good one.